on my mind a lot. Don't need no time watch. I don't know how I got you in my pocket spot. Yeah, that's babe, miss you every day. You like my oxygen, make it seem like the barging down. Got my heart no barging in. From the bed to the floor to the couch. Might wake the neighbors up, break you in and break you out. In the end, we're gonna make it.
Deanna, we're back, all-time high. Now, we left our listeners in a lurch last time through. We told them that you were going to tell a story. You're a great storyteller. Do you want to start off with where you left us last time, or you want to dig into the heart of the episode?
Yeah, where did I leave off on the story?
I don't know. You mentioned something that I promised that you would tell. Well, it must not have been that important. So
it was a really good story, though. We'll think of it.
Yeah, it'll come back to me. When it does, we'll go right back to it.
My bad.
So you're leaving our listeners in a lurch. In the meantime, while you're lurching, go ahead and hit the like button, subscribe for content like this. You can't get anywhere else. That's right. Hit the notify button so people can know where it is that you can find us. And you basically are waking up the algorithm. But the only reason you're sticking around here is to find out what it is that you need to know and where we are in terms of the all-time high and the all-time high in the marketplace. And we're not there right now.
No.
We are waiting.
We're
waiting patiently. We are team sideways right now. And the legislation, the clarity that we need so badly is on hold. And there's one big issue, Deanna. What is the huge issue that the banks are fighting over right now?
Of course, the one thing that affects us, I don't want to say the most, but probably the most beneficial thing for us, the yield.
The yield.
The yield.
There is a yield sign, and this whole thing has slowed down and stopped.
Yes. It's come to a yield.
So we need to help the 2 or 3 listeners that we have.
Hi, Mom and Dad.
Hi, Mom and Dad. Hope you're enjoying the show. Help them take a look at which side of the yield coin you land on.
Yes.
And whether we think this is going to pass or not, and whether or not we're going to secure the clarity. But I will say this. The reality is, like, you get to be very careful now because, you know, the 1933 Securities Act, guess what? It's still the one that governs securities today.
Of course it is.
So this thing, whichever way it goes, is going to be around for a long time.
Mm.
And you get to pick one side. I'll pick the other. Are you for yield or against the yield? Okay.
I mean,
so you're like, are you for people? Or are you for business? All right. So I want you to, this is good. This is good.
I can't argue for banks. There's no way I can argue.
Oh, but I'm going to. That's what I'm here.
Oh, okay, perfect. Okay,
for the greater good. And I want you to come at me, you know, but mind you, I have got a plethora of lobbyists behind me. I've got big money behind me. I am the incumbent. All right. You like the way I said that, huh? James Earl
All the
Jones.
more reason. All the more reason
to take down the establishment.
You need to go.
And I'm not saying that's not why we're here. That might have been what attracted us to this space. But I am, libertarian or not, looking for ways to get something established that's successful in a day. So whatever soundbite you might hear in a second, here's a quick paid political disclaimer. These are not necessarily my thoughts, but I'm just arguing the other side of the coin so I can understand how the other person is thinking. Because once I get there, I can find a solution that's better for everybody. Okay.
All right. I'll be open-minded.
Well, so tell me, give me your sound bites about why yield is so important to the crypto industry. I mean, what do they even care?
Listen, it's time to stop taking everything and give something back to the people. It's not hurting you. You're making 8% on loans and all the stuff that you do with the money that you hold anyways. You give barely less than 1% to the people who actually leave their money with you. Like, stop being greedy. Put money back into people's pockets. The purpose of crypto was to even the playing field. And yet the big people are coming in and they just want to suck it all up again.
We just want to protect the people.
Yes.
We want to protect the people.
Oh, no, you're not doing it. Howard, tell me how you're protecting people.
We want to, well, first off is we have insurance. All the deposits in our institution are federally insured. Will the yields for these what did you call them?
Cryptocurrencies?
Crypto coins? Oh, those.
Crypto coins?
Oh, sure. Are they federally insured?
I mean, if the banks are messing with them, they would have to be, no? So actually, let me ask you that, Mr. Bank. Are your crypto coins federally insured?
cryptocurrency, as I believe they call it these days, I'm not certain, is not federally insured.
Oh, so you're going to be dabbling in it. You're going to dabble in it and you're not even going to federally insure it?
Oh, no, no, no. We find great irony in your, what do you call them? Stablecoins. Stablecoins? Is this what you call them?
Yes.
The only thing stable is the US dollar. The stability we have, you know how much a dollar is worth at the bank? It's worth $1. And it's been that way since, I don't know, Andrew, what's his name? Since Hamilton, it's been that way.
Oh, yeah. Alexander Hamilton, that guy.
Yeah, that guy.
Here's the thing. We've already done it. We had stable
already done
coins that
what?
were paying 12% and 8% yield. It
And
didn't
so I'm
ruin
worried about that.
anything.
Where do you generate that kind of yield from?
It didn't damage anything. It didn't disrupt
Not
the
yet,
banks. It didn't
but
hurt anybody.
we're not sure about the way that the industry handles itself. Are you familiar with a gentleman? I think he went by the initials SBF. And I also think he had a company with initials as well. This
Yes.
unscrupulous character, FTX, I believe it was.
Yes. I
Can
heard
you tell me
Elizabeth
that
Warren was on the
story?
board.
How did the yield go for his coin and company?
Oh, I
How are
think he had
those?
a huge yield. I'm not even sure what I'm pretty sure he had a big yield. He had
He
the
did.
biggest I know of was like 14. I didn't see anything past 14.
Oh, and how's it going for him now? Is he serving 14 to life?
Okay. I can't, your banker voice, I can't tell if you're going like old colonial wise or just like old.
I'm just having to be somebody different than who I am, which is where I'm at.
Killing it.
It's a little bit of improv. It's not my
Killing
best
it.
work, but it's not awful. It's not awful. It's helping me get into that character, that persona, so I don't feel like I'm, betraying myself.
Right.
That's what.
Okay. So going back to it though, how is paying yields to consumers hurting the banking system?
Well, I think it's bad because banking industry, which has been around for 100 years or more, it provides people with goods and services and the ability to take out loans, like you said. And we think that's a wonderful thing for communities and local grocers and car dealerships and things that help support the local areas. Are you not in favor of local banks, Deanna?
So you're saying you're only willing to give us money if we pay you money to give us money, but you would never just give us money for being loyal to you?
That's right. We want a business model that supports the entire community, not unscrupulous characters like yourself.
Oh, phew. Obviously, because I've been debanked a couple times. Thanks, Chase.
That's what can happen here. What AMC, KYL, all the different acronyms do you have in place for the
AML,
legislation
yep,
that you're proposing? Know your customer, anti-money laundering.
Yeah.
I don't think those were invented in the banking industry. We've taken great lengths to ensure that consumers are protected. And our business model is highly functioning. It's been evolving over time. And one of the safest ways we can protect the money is to, make sure those interest rates are reasonable, are capable, and sustainable.
Yeah, well,
We're worried
that's
about
fine.
this-
You can do it. You're just going to price yourself out. I mean, what do you do when you've taken everything and there's nothing left to take?
Oh, that would be BlackRock.
They're not done yet.
They are not done yet, or they own a piece of just about everything across the world.
I can't understand. The only thing I can say is if banks are scared to touch crypto, they don't want to give exchanges the opportunity to provide a higher yield than what they can because they don't want the competition. So essentially you're saying that banks are the monopoly in the financial system and that no other type of technology or company is ever, but you have like MasterCard and you have, cashless payment systems and you have all these things that are made, I guess, because it's complementary to it or it fits so nicely into it, whereas crypto doesn't.
Right. Crypto could exploit the 3 to 4% that they make on the transactions. Crypto can exploit the 3 to 4% that they make on the holdings of our money in their bank, right? Because if they're only paying us 0.25%, like 0.25%, and the actual 10-year or even 2-year yield right now is 4.3, that spread, that's their margin. And then like you mentioned on their loans, that spread can be 6, 7 higher risk customers. You even heard the president talk about should we be allowing credit card companies to do 29%, 27%? He said, and people don't know that. They just know they got to make this monthly payment.
I know.
And so if they're making the monthly minimum and that 29% is growing faster than the payment that they're making, this thing is never going to actually be paid down. And all that is just lucrative. It's incredibly lucrative.
Yeah,
so
it's incredibly.
I think it's going to be very difficult. I think Brad Garlinghouse once said that before they give up money, they will bring out the guns and tanks, meaning that this has never been like and not the US of A, but all countries, right? The ability through fiat currency to implement controls and systems. You have created an incredible moat around the US banking industry. Not you, but
yeah, you know what kills me though? It's like these moments when we can have these conversations and we can say this, and it's like they're so strict and they're so regulated and they own so much of it, and yet you see things that are going on in the US of large amounts of fraud, of cash, of money, just like wandering around. So it's like you don't want to actually give us any yield, but you'll let drug people embezzle money, right? Like the level of corruption and just, you know, how they forced us into the system that's just constantly sucking money out of us, you know?
Yeah,
you
I don't know if it was
to get it.
I don't know if it was 1919 or 1920, in that window of time where they met at Jekyll Island, that established the Federal Reserve, which is neither federal nor reserve. And it really was JP Morgan and a few other people getting together and setting up this structure that fundamentally is supposed to influence and control interest rates and quantitative tightening and quantitative easing. And it's supposed to be outside the purview of politics. But I think if you've been around long enough, you start to understand that it's right in the center of it. If you didn't notice recently, there's a lot of politics around who the new chair is going to be. They sued them for inappropriate appropriations. I mean, there's just all kinds of craziness. And we're basically talking about world reserve currency status here. That's a big deal.
Yeah. Yeah. I mean, it's coming though. I mean, we can't fight it. It's coming. The question is how much can the average person take advantage of this ecosystem before they squash you out of it, which is why we keep trying to educate you on it. There's tons of opportunity, tons of ways to get in and learn and to get creative and take advantage of all of this new innovation. There's also things coming down the pipeline that if it doesn't go our way, these things won't be here anymore, that was like my favorite part of it, you know, level of playing field, give everybody a chance.
So you're playing in this game. Would you rather get a bad set of rules that favored the banks but legitimized cryptocurrency now, or wait 8 more years, potentially? I'm not even saying it would happen then, but I think a lot of stuff would go offshore from a USA perspective. Like, would you take bad rules now? Are bad rules now better than good rules later?
No,
better rules later?
Is that you can't undo it once you give them the power. You know what I mean? Like, I would stick to the guns. I'd be like, no, it's been long enough. Like, we don't need bad rules right now. We know it works. We know it doesn't work. We know.
So are you team Brian Armstrong then? Really? Coinbase kind of approach to it?
Of course I am. Of course. Yes. Yeah. To me, like, DeFi was so much fun because you could buy these coins that would go up in value and you could stake them and then you would double your coins. And so then it was great. Like, all of a sudden you could just kind of make money out of this technology. And while the novelty of it tended to wear off without the actual viability or use cases, that opportunity itself was there. It didn't hurt anything. It was possible. And why people refuse to take advantage of it just drives me crazy, unless it's keep people down, keep people up.
Let's go a different route. Okay. Let's go back in time travel for a second.
Like DeLorean?
Yeah, that.
Okay.
Back to the Future. I've got on my puffy vest, and we got to hit 88. So here's the deal. We're going to go back in time and we're going to look at the period when there were bank runs, because at the time, each of the state, instead of at a federal level, in fact, the reason the banking system got set up and structured that way was the Federal Reserve was going to adjust for and take care of some of these discrepancies that were happening as people went on these bank runs. If there's arbitrage, and we've already seen it, at the exchange level for crypto, people are just going to move their money around to the place that gives them the best bang for their buck. Is that fair?
Of course. Yeah, of course.
So how do we then?
Well, not necessarily. Not
I mean,
necessarily.
if I could get, instead of 1% at the bank, and I could get 5%
Yes.
at the exchange, I'd put 5%. That's what the banks are afraid of. The flight is going to happen. The money is going to come out. That sucking sound is going to the exchanges. But even within the exchanges, there's going to be an incentive to say, well, 5%. You want to see 5% at Deanna's exchange? Well, at Jim's exchange, you can get 15%. So what's then going to happen? And so you kind of get this thing starting to elevate her up, and you're going to find people that, I mean, when FTX crashed out, part of that was the rumor that hit Twitter. Part of it was CZ said, we'll take a look at your books. Maybe we're going to buy this deal. And then he tweeted that it was a bad deal. The books weren't real. They were cooked. And the thing just, everybody started taking out their money as fast as they could.
Yeah.
How do you prevent like this yield creep? How do you prevent this? There isn't really money there. I mean, banks, at least there's a structure. I can imagine like there's going to be like Robinhood's going to come out with a thing, Kraken. These are, Coinbase is going to have their thing. Right now, if you put money on Robinhood, not an advertisement, you get like 2% of the total crypto amount that you put in.
Yeah.
I mean, it's good for the consumer to be sought after. It's good for things to be competitive. But in a world where we want people using the US dollar, how do you legislate in when enough is enough? I just don't know how they do it.
Well, I mean, the thing is, people will still use the dollar. It's mostly speculative. You're not paying for things in Bitcoin. You're not going, right? So when you're saying it's literally you're storing just values of money. So whatever that is, $100, $500, $1,000, most people put it in because they think it's going to go up in value. So I'm not putting it in to spend it. So like my money's like, so cash in, cash out. Because even though you're putting cash into it, it's not good most of the time until you pull the cash out again, except for Bitcoin has the most adoption so far. Right. And so to me, I don't understand that argument completely. I think the more people have money, the more they can buy things. I think when you get to the reverse of like, keep them hungry, keep them broke, keep them homeless, you know what I mean? Like colds, like keep us so distracted that we're not even paying attention. We're just trying to make it through the day to day.
Oh, have you heard the saying, you'll have nothing and you'll like it?
Yeah.
You know that?
Yeah.
I saw
lived it for a long time.
You know where that's true right now? I just signed up for it. Have I told you this before?
No.
Apple Music. I pay $11.90 a month. I have nothing and I love it, right? Because
I love Apple Music.
Right, but you'll have nothing and you'll love it.
Have you done the remix thing yet?
No, tell me more.
So there's a mode now. There's a button where you can hit it. So like if you're you're on a boat party or techno or something like that, or like good
you
music.
Typically are. I understand. Yeah, go ahead. You're saying without saying it. Go ahead.
It's a thing for me. It'll blend one song to the next, and sometimes it's pretty good. Sometimes it's bad, but sometimes it's pretty good. So it never stops. You never have like that stop start.
Yeah,
just flows.
So how do we do that in the banking industry? How do we get this bill passed in a way? So let's just say you're the Democratic senator. Well, you're the Republican senator from Wyoming. I can see that about you. How do you get this thing through? And, Wyoming protects privacy. That's why I said what I said. You want to protect the privacy. Of course. But now you also have a senator from Massachusetts on the Democratic side who's equally as powerful.
Sure.
And how do we get these two to get along and get meaningful legislation passed?
I mean, it's just a fight of power. They're just fighting over power right now. And some people in power, but here, what is the discrepancy? The yields, it's like no yields at all. Is it a 3-point discrepancy? So like consumers can get a percentage, crypto companies can't do any yield at all, whereas like banks can do interest rate. Like what is I didn't see the exact argument.
The banks don't want any access for cryptocurrencies to provide yield-bearing instruments. Because, and we talked about this a long time ago, what it meant at the time was it was written in, but it was written in softly so that rewards could be given. And once rewards became things other than it, I mean, right, like sign-up rewards, like different elements, the cryptocurrency companies were like, sounds good to us, sign, we'll be fine. This time through the banking industry realized that it's a lot more other ways to accrue benefit to the consumer that they hadn't been thinking about. So between the original, which was, indirectly addressing this, now in the secondary one, they're like, oh, no. We're going to get this thing tight. We're going to get this thing right. There are no loopholes. There are no escape hatches. There are no alternatives. The banks are the banks. We cannot lose our business model. We cannot lose the money that we make money off of. You've heard the saying, it takes money to make money. Well,
Mm-hmm.
the banks are winning that game.
Yeah.
And are they willing to give up some portion of that model to help the country? I don't think they are until they get to a place that's miserable.
Yeah. I don't think they are either. And it's like, I get it. You're right. This might be the one thing that stalls it. But when we called this out though, when we originally read the bill, I was like, they're not going to let anybody do staking.
Anything.
You know what I mean? Like but it's such a fundamental part of not only validating the network, but for the consumer to get the rewards. So it's like, why don't you just suck the heart and soul out of it? And like, that's what the schmoverment does all the time.
Yeah. I don't think there's a win here. I think everybody
I don't either.
thought that we're going to run into midterms, and we've talked about it on previous episodes as well. The decision for the president to issue meme coins before the inauguration, right before it, that weekend of it. And I do think that's where Sachs went bad. He should have said, hey, nah, maybe let's get something passed before we go off and do this. And then it did so well in such a short period of time that they did one for Melania. It did reasonably well. There was some rug pulling action going on where people took money and ran with it. And now you've got the sound bites that you just didn't want to have about the industry, and you're giving a reason for people to stand their ground on either side of the aisle. They're now adding in additional legislation. Like there was this window of time that was there, and I just pray tell that it's not passed, or unfortunately, we're in a window of time where it's like bad rules are going to get passed that we're going to live with.
Yeah. I don't necessarily see like every time a meme coin comes out, it's a rug pull. Well,
I don't either.
I think most of the time that's what happens though, right? Like how many meme coins, have truly survived past 6-month mark? Maybe Bored Ape, like,
Dogecoin?
Crypto kitties.
Yeah.
But Doge, you say Doge?
Yes.
I guess that was the original meme coin, but like,
yeah,
they're not very
it
many.
actually has more utility now than it did when it originally started. Yeah.
Yeah. So I'm saying if you put a card out, if you put an NFT, a meme coin, whatever, if you put it out, it has a use case and it does a thing and it goes up in value and it goes down in value and you get left holding the bag. To me, what's the difference between that and baseball cards? There's not, to me either. That's what I'm saying.
I agree with you.
You know what I mean? So unless you're misleading and you're saying it does something it doesn't do, it's, you're enticing people to buy with false promises and then pulling, to me, that's a rug pull. To me, like that's the legit rug pull. And I think people get those confused.
Yeah. And well, my point of it though, is that like he created a controversy, which he's very comfortable with, that probably prohibited the space from moving forward as quickly as it could. In fact, if you were to point out what the cryptos are, David Sachs may have not done, like that first misstep, whether he was consulted or not, I have no idea. But it's at that point that he should have said, well, this is not how I saw this thing going. I need to get out of here because it's a wild arena. I do think one way through it, because I don't want to just point out the problems, one way through it, possibly you could have the deposits with the exchanges be federally insured. That would be a hell of a way to bring a lot of money over. Just the same rules and restrictions. If you put it in a stable coin and it's on Coinbase or which is not true today, it's FDIC insured up to the limits. I think it's 250,000 per person, 500,000 in joint account. I'm not sure I'm right.
It'd have to be a 1-to-1, right? Like,
yes.
Yeah.
Yes. But now
I started thinking through it in my head. Like, could we do that?
I think you could, if the government could print more money. If the government could issue more stable coins, could they?
Yeah.
Would they if they were a bank run? Yes, they would.
Yeah.
Yes, they should. And if you put that in, if I were Coinbase, I'd be like, I'll take it.
Yeah.
Right? Because at least a level playing field. But the problem is if I am not able to give yield and another agent, another company, banks, right, are able to be insured, you go to one for safety and you're not going to the other because you're going to lose both ways.
Yeah.
I don't know. We'll see.
Yep. I'm I'm hopeful we figure it out. I do think that there's an opportunity for great technology to infect a lot of people, and I hope that they just allow it to do that. Let it do its thing. Stop trying to hold on to so much power.
Yeah, no, and that is the brutal truth of the whole situation. The technology already exists. It's existed for decades.
Yep.
And the reason the incumbents are still the incumbents is because they've been protecting their power. And it's always interesting how access impacts power. If you give them access, which is what the crypto industry is asking for, when will the banks lose power? And that is what they're holding on to. Thank you, Deanna, for that insight. As always, another great episode. We'll talk to you next time on All Time High.
Bye.
You on my mind a lot. Don't need no time watch. I don't know how I got you in my